Internal controls made simple. That's the idea here. So what we do, as you said, what we do is internal control software. And it's an approach, actually. It's Excel-based software. We want everybody in the world to be able to use it. I personally implemented it all over the world in many different languages. And the goal is to actually understand what you have to do to meet your requirements, to meet your 990s checklist, to meet your auditors, and provide that to the various people who need it in a way that actually allows you to continue to run your business and be effective at it, right? It sounds simple, right? At the end of the day, people are going, "Oh, this is laborious." I hear it all the time. This is, I don't want to have to do all this extra work. That's when you need to sit back and go, okay, what are we trying to accomplish here? So I'm going to take you through some basic things that might be able to help answer those questions and get that going for you. Here we go. So what I'm specifically talking about today are only internal controls over financial reporting, not internal controls, for instance, around uniforms or marketing materials or logos on things or cars or whatnot. Just the ones that say, okay, we have a step in the process that says we have to double check. For instance, you're going to pay a journal entry, and you're going to post a journal entry. You have to look at the support and make sure it all jives, and then go ahead and post it. Okay, so that's where I'm focused right now, is on the financial controls, not the operational controls. Those financial controls can be in every aspect of your company, whether it's accounting, accounting related, IT related, HR, all those types of areas are going to have those financial controls. There's also going to be the operational ones, but again, from what my perspective is just the financial controls only. All right. So lots of benefits of internal controls. Does anybody have any? No? Oh, come on. No, there really are. There are a lot of benefits of internal controls. I do this all the time, and actually some of them include reduced audit fees. In the nonprofit sector, the case of a lesser IRS scrutiny, that's always a good thing. But the biggest issue, or the biggest benefit that I would find here, is no surprises. A surprise in the accounting department, if you find a spare $100,000, that's not, you don't want that. No surprises. If you find an extra amount of money that you hadn't properly accounted for in the beginning, you've got trouble. And that's where your internal controls have failed you. And that's where you can go back and do some revision to make sure that they're actually operating effectively, so you can rely on them and not have those surprises. Because again, the goal of the company is to run. So that's the point, is be in business. And if you document those policies and procedures, it doesn't have to be complicated, just get it figured out, you can actually focus on your business rather than your audit or accounting issues, finding that support for that one journal from 8 months ago that you missed. That's never good. These are serious statistics here, and it's true and it's real. So that's where the statistics like this come from, I realize that, again, your business has to run, but at the end of the day, if you were to say, okay, a perfect internal control around that, we're going to require that, in the beginning of the day, we give you a certain amount of change so you can make change for people who are giving you cash. You're going to tally up and keep a nice, accurate record of the transactions you bring in, and then we're going to, at the end of the day, count it out to make sure it's right. And perhaps that doesn't happen at the end of the day. It could happen the next day. It could even happen a week later. But as long as it's done and you're checking, that's the point of a financial internal control, is to just double check that point in the process to verify that things are accurate, and that the cash you're expecting to get is what you actually are putting into your accounting system and to presenting to your shareholders. So I'm going to give you these 5 steps. This is a typical implementation cycle for any company, like I said, I've done this across a multitude of industries all over the world, and this is it. This is everybody and their brother, honestly. So you start off with a risk assessment. So the point is there are universal steps that can be applied to any company, no matter what they're doing, and allow you to actually focus on the unique aspects of your company and get this part of it done. Because, as you heard a little bit earlier, internal controls, Sarbanes-Oxley, again, that's an evil word, but those types of things can take a long time, they cost a lot of money, and they have a bad reputation for really good reasons. Very good reasons, in a lot of cases. They don't have to, because again, AP is AP is AP. You all said AP is pretty much high risk, so does everybody else. And you've all figured out, or at least it has been figured out, how to write a check, how to do a wire transfer, how to reconcile your bank account, make sure everything that you paid is in there, and make sure everything you deposited is in there, and withdrawals are right. Those things have been figured out. So to that extent, When you're documenting your internal controls and spending all that time, energy, and money doing so, a company like ours, for instance, comes equipped with all those best practice internal controls across a multitude of processes that are already figured out. So you don't have to spend your time trying to document that stuff. We've got that stuff ready. Focus your efforts on those controls that are unique to your company, and that'll take less time. So, risk assessment, okay? Analysis of balance sheet, income statement, and disclosures, if they're applicable to you, to see what areas of your company are risky. And we're going to go into this in more detail. Document those controls to prove that you've mitigated risk to those areas. Test them, because you've got to prove it. Make sure you're actually telling the truth. Audit, or God forbid the IRS comes in, double checks. You sign that Form 990, you say you have these forms, policies, procedures, whatnot, they're going to want to test that and see if you got it. And then you report it and you start the cycle again. And this is universal to any company I've ever been in. So, with your risk assessment, it's a really effective use of your time because, and I love external auditors. I used to be one, not anymore, but we were invited to come here today by one, so we love them. But no one knows your company like you do. So if you're not participating in the risk assessment process, and your auditors are coming in and auditing and managing that process for you, chances are, that process may be not as efficient as it could be. And reason being is because, they don't know as much as you do. So if they were to say, for instance, fixed assets, how many people have fixed assets as high risk? A lot of people don't. But there might be a need or a cause for an auditor to go poke around in that area. And if you don't tell them otherwise, they're going to just go do it. And unfortunately, external audit is expensive. So, you're paying for the privilege of someone auditing an area that perhaps didn't need to be. So you do your risk assessment, make you more efficient. Your auditors do it. That's how they determine what areas they're going to actually look at in your company. And that way you can have that ability to push back because you've actually made a concerted effort to participate. Starts the process, right? All right? Okay. Okay. Again, we spoke about this a little bit earlier in that you document your controls around financial reporting, you document your AP controls. It doesn't have to be a big, huge process. We have plenty of actual public companies and nonprofit companies who have a total sum of 20 controls that they have documented. And that's their control infrastructure, that's what their auditors look at, and that's what they're going off of, and that's their procedure. So I know it can be intimidating when you say, I have to document this policy, or I'm filling out the Form 990 and I actually have to create these documents. You're like, oh, this is going to take forever. Yeah, I mean, that's pretty much the case in most situations. But it doesn't necessarily have to be. I mean, a policy is as much as you want to put into it and as much as you want to enforce it. That makes sense? So, 20 controls at the end of the day may be sufficient for you. We have other companies, public companies on the OTC that have 10 controls. Again, and if you think about it, it's kind of rational. You pay your bills, have a couple controls over that, paying, wires, bank recons, you close your books, a couple controls over that, making sure journals are posted properly, and not everybody does it, but you should. Balance sheet, prime account recons, making sure that those accounts actually got posted correctly, everything's coded and in there right. Your financial reporting, making sure that those are going to be out there and ready for your stakeholders. And that you can rely on your financial statements. If fixed assets important to you, making sure your depreciation's right. That's it. The very best thing you can do for yourself is create a closed checklist. I really recommend that. Remind yourself on a monthly or quarterly basis of those controls that you have identified for your company. And put it into Word or Excel. It doesn't have to be complicated. And just, make sure it gets completed every single month and, either print it out or electronically save it to prove that you did it. We're human, we get sick, we get tired, we forget things. So it's just a way to remind yourself of what you have to do. Yeah, these are gnarly statistics too, and it's real, but a lot of times, and this is with public companies and nonprofits alike, we always get people who say, my internal controls are fine. And I know they didn't do anything about it. I know they haven't written up any policies or procedures, they haven't done anything like that, but no, it's fine. I get that all the time. And the problem with that assumption is you've got some nasty statistics that prove that doesn't really work, And then you also have personal liability on your board level. That, you know, if you want to put your house up, you know, as a potential payment for making a wrong assumption in that regard, when you can get this done, I mean, literally, you can get this done for less than $5,000. Is it really worth it to make that assumption? So the other thing in this regard too is your auditors. It's an unfortunate situation, but you know they're basing their audit of you on risk, and you're guilty until proven innocent. So you know if you haven't done anything, you run that risk of them, you know, one, letting other people know that you haven't done anything, and that could damage your reputation, which we're going to see in a minute. And then again, you can avoid that personal liability. You can sleep well at night knowing you've done what you're supposed to from a fiduciary responsibility. You know, and one thing Ingrid said, you know, now what? You know, you documented your policies, you documented your procedures. Now what do we do now? You test it, make sure people are actually doing those things. So you take your journal entries, you take your AP payments, and make sure that they're being executed according to your procedure. You don't have to test everything, you just test a statistical sample of them, a few here, a few there, making sure that it actually looks like it's working. If people aren't doing the right thing, you tell them what they need to be changed, you know, how it needs to be changed and what to do next. Okay? What's the role of your external auditor? What is it? What are they there for? Are they a management tool? Okay, actually no. They used to be, but they're really not anymore. They're supposed to be an unbiased third party who is there to audit what you have done. To that extent, they're in a bad situation because you may have experienced recently that they're asking you for internal controls documentation more, and that's because some new legislation has been passed. That forces them to do that. Or you may have asked them to help you in ways that they may have said, no, sorry, you go figure that out and you come back to me. They have independence rules, which require that they don't audit their own work. So to that extent, they're not really necessarily anymore like an extra arm for management. They're there as an unbiased third party to review what you've done and report to the stakeholders on how well you did it. Think of it like a teacher. You know, they're checking out what you're doing. Client's a student. Someone like us at Vibato is sort of like a tutor. We help you get to the end game. That's what they're trying to do, is make sure you've done it right and then report on it. So you can, if you participate, actual audit can have an ROI for you. It can actually have an ROI. The process of investing in actually documenting your controls, documenting your procedures, testing them, giving them to your auditor, could cause your audit to be like that. So how many people want to invest in Bernie Madoff's new venture? No one? Why? Because he's got a bad reputation? Yeah, because he's going to steal your money and rob you blind and do all those things. That reputation is, you know, in a nonprofit arena, it's a small world. And if you are part of an organization, intentionally or otherwise, that has a negative accounting or a negative report come out, it may follow you. You don't want that, again, because it's avoidable. This is entirely avoidable, and it can make your operations tremendous. You can have a situation where, you know, you can become a legend. You can get, you know, people will want to bill you out as an excess form of revenue, like Christina was saying, you know, because you know what you're doing. You know how to create a procedure. It's not that hard. And it can be really easy. So, again, you know, you don't, losing the status or losing your reputation, those things aren't worth it for something that you can avoid and actually do it quite easily. We can typically go in, just so you know, we typically go in and do a documentation of your average $100 million public company traded on the NASDAQ. So we get all their internal controls documentation done in less than 3 days. So it's not, you know, again, I know it got a lot of bad press and stuff like that. So people think of it as this scary thing, but it's really not.